Hello, accounting students. Good afternoon. I'm Dr. Ali. I'm sorry the Zoom meeting that we did yesterday, I don't think it was very successful. However, there were about 11 students who were in attendance. And I think I'm going to give those guys some extra credit because they care for the course and they are trying to learn. So we basically talked about the comprehensive problem that is required. And problem 10, chapter 4. Problem 10, chapter 4. I tried to show them the textbook, but because of the background of the Zoom screen, the textbook did not work. It did not. It looks like it just comes and goes. Yeah. So here is the book one more time. I think now it's very clear. This is the textbook. You all see that? The Principles of Accounting. All right. Okay. And this is the 12th edition. 12th edition. And these are the here. Okay, these are the ISBN numbers. Do you see those? ISBN numbers. Okay, I promised to show that to the students who were in attendance for the PowerPoint. I'm sorry, for the Zoom. Okay, let's go straight to the problem. Okay, the problem is on page, let's see. The problem is on page 165 of the textbook. Guys, you need to get the textbook, as I told you before. In accounting, okay, this lecture is not enough, yeah, because you got to get the textbook, as I keep saying, has thorough analysis. The textbook has thorough analysis and examples. Very, very good book. Okay, so page 165, the comprehensive problem, here it is, page 165. You see it? All right. At the same time, guys, I want you to open on pages. So look simultaneously at page 165 and at the same time on page 48, 49, 50, 51, 52, 53, 54. Okay. Pages 48 to 50, I'll just say 55. Okay. 48 to page 55, because those pages 48 to 55 of the textbook, those are a replica of the comprehensive problem. They are a replica of the comprehensive problem. I thought I just show you that. For example, on the comprehensive problem, okay, which is here one more time. The comprehensive problem is here 1-4. All right. You see it? Okay, on June 1st. On June 1st. You see June 1st? It says, began business by depositing $20,000 in a bank account in the name of the company. Okay, who is this person? This person is Bob Lutz, who is, says problem 10, on June 1st, 2014, Bob Lutz opened Lutz Repair Service. During the month, he completed the following transactions for the company. So that's We are only interested in the month of June only, guys. Okay, we are only interested in the month of June. On June 1st, began the rent. Sorry, I apologize. Began business by depositing $20,000 in a bank account in the name of the company. That means he brought this $20,000 from his own cash account and put it in the cash account for the name of the business, in the name of the business. So we are not interested in his personal cash. We are interested in the business's cash. Okay, so like we see in, if you remember, on previously, we said every transaction has two sides. One side with at least one debit and one side with at least one credit, and the total of debit equal credit. That's a double entry system. Okay, so began the business by depositing $20,000 in a bank account in the name of the business company. That means what? Then what are the two accounts? You tell me what are the two accounts, guys. The two accounts are the cash of the business and the capital of the owner of this business, Bob's capital. So cash is an account, okay, and cash is an asset account. When assets increase, they are debited. Okay, the capital increased. Capital is owner's equity. When the capital increases, it is credited, the opposite of assets. Remember, we mentioned in one of the previous tapes that assets, expenses, withdrawals are treated the same way. Assets, expenses, and withdrawals are treated the same way. When they increase, they are debited. When they decrease, they are credited. Okay, so the cash of the business increase, so we should debit cash. The owner's capital, Bob's capital increased, we should credit the capital. All right, so this example, this transaction is a replica of the example on page 48. Okay, page 48. This is how it looks like. Page 48. All right, you see page 48. This is page 48. Owner's investment. Okay, owner's investment to form the business. So the June 1st on the comprehensive problem is very similar to the one on page 48. Okay, so on page 48 it says, on July 1st, Joanne Blue invests $40,000 in cash to form Blue Design Studio. Okay, so the cash of the business increased and the capital also increased because this is the first time we get the capital. So we got to debit cash and a credit Joanne capital, John Blue capital. All right, same thing with the June 1st on problem 10. You're all with me? And look at the book. How did they do? Okay, how did they do? They debited the cash and credited J Blue capital. There it is. You all see? The yellow. Debited the cash and credited the capital. Okay. On June 1st, also, we're still with the comprehensive, paid the rent for the store for current month, $1,700, paid the rent. Now, is there any transaction that looks like this for the between pages 48 and 52? Sorry, and page 55, between those pages. Okay, let me see. Okay, on July 3rd, okay, rent an office for Blue. And, okay, it says here, paid the rent for the current month. Okay, and, okay. On July 1st, I'm reading from page 48. On July 1st, also, John ordered $5,200 of office supplies for the Blue. He ordered the office supplies. Is this recordable? No, it's not recordable because he just ordered the merchandise. There's no merchandise took place, nothing exchanged hands, no receipts, no payments. So this is a non-recordable transaction. So you got to move to the next one. And so on July 3rd, Joanne rents an office for Blue Studio. She pays $3,200 for 2 months rent. Okay, paid for 2 months rent. Okay, that means what? We have a prepaid insurance. It's not expired. That's why we call it prepaid. Same thing, if you buy supplies and you pay for it, you got to debit supplies. So we debit prepaid rent and credit cash because there was a payment for cash. So that's what I want you to do, guys, when you look at the comprehensive problem. Requirement 1 says prepare journal entries. So for each one of those, on June 1st through the 30th, June 1st through the 30th, requirement number 1, you got to do journal entries. And those journal entries look like exactly the journal entries between pages 48 and 55. Okay? Between ages 48 and 55. So you got to look at the two pages, two places simultaneously. Okay? So when you end the month, that's how it should look like. That's how it should look like. Okay, that's the key. I'm not going to show it to you, but that's how it should look like. I'll let you look. It's okay. I'll let you see the first one. Okay, I'll let you see the first one. Notice we debited cash. We debited cash and credited the capital for $20,000. Okay, you all see that? And on the second one, I'll show you the second one too. It's all right. Prepaid. All right. It says paid the rent for the store for the current month. So that's going to be rent expense, debit, and credit cash. You see how it looks like? Debit, rent expense, and credit cash. So by one time you finish those, June 1st through 30th, that's how it should look like. I'm not going to show it close to you so you won't see it. That's how it should look like. That's requirement number 1. You all with me? Requirement number 1. Okay. Requirement number 2 is open the following accounts. Number 2, It says open the following accounts. You'll see number 2, requirement number 2. It says open the following accounts: cash, prepaid insurance, repair supplies, repair equipment, and on and on. For each of those, you have to open an account. What does that mean? It's a general ledger account. General ledger account. Okay, let me show you how the general ledger account looks like. This is a general ledger account. Let me go through with you. So cash, I'm going to write down cash. Cash, you all see that? I know you can't read. It's not a good handwriting, but this is cash. The first column is the date. The second column is an item. The third column is debit column. And the third column is 1, 2, 3. The fourth column is credit. Okay. Date, item. Make sure the item is a little bit wide. Then debit, then credit. And those last 2 columns are for the balance. The last 2 columns is for the balance. It's either debit balance or credit balance. So I'm expecting the cash to be on the debit side all the way, the balance, okay? The balance of cash should always be in the debit side, because remember, we mentioned previously that all assets, normal balance, should always be a debit balance. If it has a credit balance, and we see this many times, that means you are in the hole. Okay, you are broke. If the cash ends up in the credit balance, that means you are in the hole. You are at a loss. You bankrupt. No cash. That's what it means. So the balance should be on the debit side. Whether it is cash, account receivable, notes receivable, building, equipment, machines, buses, trucks, the normal balance should be on the debit side. We okay? So we need to do, how many of those we need to do like that? We need to do, let me see, how many one? It says open the following accounts, and I'm reading requirement 2. So we have cash, prepaid insurance, repair supplies, repair equipment, accumulated depreciation for the repair equipment, accounts payable, loans capital, loans withdrawals, income summary, repair revenue, store. It looks like about 15, 20 accounts. So that means you need to do 15, 20 of those. Okay? 15 or 20 of those you need to do like that. One, then you do another one for accounts receivable, another one for just like that. Okay? The longest one is going to be for cash, guys. The rest of them is going to be probably half that. Maybe this, like that. But cash, because there are many transactions that affect cash. Okay. And where do we fill the numbers in these from? These numbers are filled from the transactions that we make. Okay. Remember, I showed you that your general journal page looks like this. We're going to move numbers from here to here for each account. So let's see the cash. Let's say this is the cash. Okay. From the comprehensive problem. began the business by depositing $20,000 in a bank account in the name of the company. So he deposited $20,000 on June 1st. I'm going to write down here June 1st on the date, June 1st. That is initial investment. So I'm going to say, or you could say start of the business. Initial investment. Now, was it debit or credit, the cash? When we did, remember the first one? We said the cash is debit. So $20,000 in the debit here. $20,000 in the debit. So what is the balance now in cash? What is the balance now in cash? It's 20,000. It should be on the debit side here, 20,000. So right now the balance in cash is $20,000. Okay, on June 1st, paid rent for the store for the current month, $1,700. So the journal entry here says, does it involve cash? Yes, it involves cash. So see the second journal entry, the cash was credited for $1,700. The cash was credited for $1,700. So on June 1st, again, let me just to help myself like that. I would just, not necessarily. On the 1st again, June 1st again, payment of rent. Payment of, that's the item, payment of rent. Now the cash is credited for $1,700. Notice I put it in the credit side, $1,700. So what's the balance now in cash? What is the balance now in cash? We started with $20,000. All right, now we use $1,700 of the cash. So what's not up to now the cash? 20 minus 1,700 is what? 18,300, correct? So the balance 18,300. Okay, so I put a line. All right, and then one more. Paid the premium on 1 year insurance policy. So it looks like when it says paid, that means paid cash. Okay, that means so on one more time, because 1 is 3 times, this is a payment of insurance. Payment of insurance for how much? For 1920. The cash was credited, so I put it under credit 19. So what's the balance now in cash? That's still decreasing the cash, whatever the balance here, and then you keep on and on and on. Now, on the 15th, I'm reading from the comprehensive problem 10, page 165. The 15th of the month, received cash repair revenue for the first half of the month. That means he did some services and collected cash. So you're going to go down until you get to the 15th of the month. Now he received cash. That's revenue. Received from revenue. From revenue. Okay, and the item, just describe it as from revenue. Okay, and is the cash debit or credit? It's a credit. No, I'll take it back. Sorry. Is it because it's increased? It's debit. For how much? For $1,600. Under debit, $1,600. It's an asset. When asset increases, they are debited. So that means, guys, I'm going to add whatever the balance here, I'm going to add $1,600 to the balance, and that becomes the balance. Okay, so this is the general ledger. So you got to do about 15 of these. Okay, let me show you how they look like. And this is your problem. Problem 10, the one that you have to do. I told you the cash is the longest one. This is how the cash look like. The cash ended with a balance of 17,140. That's the balance in cash. You ended up with 17,140. Okay, so you move all the items that belong to cash from here to the cash here. And look at the next one was the prepaid insurance. Okay, open the prepaid insurance. Prepaid insurance is very small, you see? It was still the same title, but there are not too many transactions. It looks like only on July 6th and June 1st. June 1st and June, sorry, not July, June. 2 transactions that belong to prepaid insurance. That's why you see 2 of them only here. Got it? So this is for prepaid. Look how many I have. 1, 2, 3, 4, 5. 6, 7, 8. Somebody's calling me, and let me send them a message telling them I'm busy. Uh-oh. I wonder who is that. Well, anyway, they will probably send me a message, whoever they are. Besides, I can't use my phone, guys. When I do I can't use my phone. I can't receive. But if I want to chat with somebody, it's gonna say. So don't call me. Don't ask me to call you. But email me. I promise you, I respond very fast. I don't respond by phone calls because my phone is not bad and I'm not in the office to use the office phone. So I apologize for you guys. So please don't call me. And but I probably respond faster on the emails. Okay, so we need that's requirement 2, open the account, and then so you're gonna do for 15 of these like this, and you're gonna move the numbers from here to each account, And then also, guys, on number 3 says use the following information to record adjusting entries in the general journal form. Number 3, use the following information. Now remember, adjusting the accounts, chapter 3, we talked about adjusting the accounts. We talked extensively about those are just normal journal entry. Don't be confused. When it says journal entry, just like this one, adjusting entry, just like this, exactly. In fact, see, I wrote it here. See, note, I wrote adjusting entries. That's requirement 3, adjusting entries. Okay, so we have adjusting entries, DCF, adjusting entries, DEF, okay, adjusting entry, DEF, you see that? 3, requirement 3, adjusting entries, DEF. All right. These, see where they are located, guys? They immediately come after June 30th. These are the same principle, the same analysis that we did when we did these transactions. The same thing. For example, D. D says 1 month insurance has expired. 1 month insurance has expired. Uh-oh. I will respond to those in just a minute. Okay. D, 1 month insurance has expired. So if you go back to the problem, guys, on the 1st, June 1st, okay, number 1, first, one, then 1, then 1. The third one, it says paid the premium on 1 year insurance policy. 1 year insurance, that means 12 months. They paid $1,920 for 12 months. Okay, if they are saying 1 month has expired of this, so you got to divide 1920 by 12, and then you got to do a journal entry that says insurance expense is debit and credit prepaid insurance. Okay? And that is, there it is, under adjusting entries. You see it? You got to divide the 1920 by 12. Now remember, the prepaid is a deferral. Remember, all the prepaids are deferral. We purchased, Mr. Bob Lewis purchased insurance policy for 1 year, for 12 months. He paid $1,920 for it. But 1 month only expired of that. And so that's what we got to reflect in this adjusting entry. Okay. Requirement. So you got to do one for D, E, and F. And then also, once you do those, guys, you got to transfer them to those general ledger accounts. Okay, let's see. Okay, before you do the adjusting entries, let me just advise you, do a trial balance. See if your work is correct or not. Before you do the adjusting entry, do a trial balance that look like, let me show you how it looks like. Well, I don't have it because it looks like it's not complete. But let me show you how a trial balance looks like. Okay, I'm going to erase this one. I know you don't like this board and you don't like my handwriting, but I do refer you to the pages in the book. So listen more to what I say and what I recommend, okay? The trial balance, very simple. There's no date here. This one should be big and these are smaller. This is the account, and here debit and credit. Of course, here is the title, the name of the business. You're going to list all your accounts, cash, accounts receivable, prepaid, land, building, etc. You list all those accounts here, and then you're going to post the balance. For example, the cash balance from my general ledger, the cash balance is 17,140. The cash balance is 17,140. So I'm going to put it over here. Cash is a debit balance, 17,140. So I move all the balances here, and I add total debit and total credit. They must equal, guys. If they don't equal, something is wrong. Okay. So if I were you, I do a trial balance before I do the requirement 3, DEF, the adjusting entries. Then I do the adjusting entries and I straight go completely, I move them into their respective ledgers. You may have new accounts here, guys. You're going to have insurance expense. You will have, well, maybe the insurance, yeah, you will see it is there on the list of accounts. You will have, so insurance expense goes to insurance. The new one that has no numbers are going to be the insurance expense, repair, supplies expense, and depreciation expense. So you got to, those are the 3 that has new numbers in them. Okay, guys, so these are requirements 1, 2, and 3. Please work on those. And like I said, if you study pages and compare the transactions on problem 10 with those between page 48 and 54, you will see there are a lot of similarities. Okay, and notice, guys, they have exhibit 6. The general ledger, guys, is a extension of the T account. You see the T accounts here. The longest one of them is the cash. You see the cash, the longest one of them, and that's where the trial balance, these numbers, their balances, this balance, the blue, this balance, this balance is, that's what you move into the trial balance. Okay, I want to show you also some practice set. Oh, here's the trial balance. It looks a lot better than mine. A lot better than my handwriting. On page 56. See, that is a trial balance. See it? And those numbers came from the T accounts here. The balances in the T accounts. That's where those numbers come from. So when you do your trial balance for the problem, it should come from the general ledger accounts. I want to show you in the book a general ledger account. It's a lot better than my handwriting. Okay, here's one. Page 59. Here's a general ledger. Page 59. You see it? That is a general ledger. Okay? And look like the accounts payable. That's for accounts payable, and the numbers came from, okay, accounts payable. Accounts. Okay, the general ledger on page 59 for accounts payable, you see that? For accounts payable, these numbers that you see on it are from the T account for accounts payable. You see the T account for accounts payable here. That's where those numbers came from. Okay? All right. In your case, in our problem, they're going to come from the from here, from the general journal page that you already made. Okay. Okay, I'm going to show you a practice set also, guys, where that will be very helpful to you. That's why I'm telling you, you need to get the book. The book is a must. If you don't have the book, that means you are not serious and you're just don't expect to learn any accounting. Even me, I've been teaching accounting for 21 years, over 21 years. I still come to the book. So that's what I'm saying. You need to get the book. I'm looking for a practice exercise for you guys. So I tell you where you can do that. Okay, there is a practice exercise on page 66. Page 66, you can practice. See? Very similar to the comprehensive problem. Page 66. Here is a general ledger, general journal. You see that? That is a general journal. Okay? And then here are the T accounts. The T accounts that came from here. From here. Like I told you guys, that's a secret. The general ledger is an extension of a T account. Okay? All right. Let me also show you. Okay, chapter 3. Here is, guys, another practice on page. These are adjusting entries, guys. Adjusting entry on page 105. Page 105. You will see the answers on page 106. Okay. Okay, I think the comprehensive problem is clear for you guys. So please go ahead and start working on it. And if you don't have the book, hurry up and get it. Don't waste your time. You will not be learning accounting. And as I keep telling you guys, accounting is the language of business. You got to be patient. You got to take your time. You guys, when you study, like I said, chapter 1 through 4, guys, you got to read them word by word. They are connected. They are connected, okay? All right, have a blessed day, everyone, and have a good evening. So don't worry too much about the Zoom meeting that we did yesterday. That's what we covered. We talked about, I think today I was more clear. You saw the pages number. I couldn't show the pages on that because of the background on the Zoom meeting. Okay, I'm going to stop and have a blessed day, everyone.